Good afternoon, everybody. It's going to be our Summary Markets episode 192. We're going to start off with this week's calendar, then we're going to move into analysis for the futures market. So starting off with the calendar, there is nothing on Monday to worry about. It's actually completely clear. Moving to Tuesday, we do have some high impact data. We have the manufacturing PMI at 945. We have the services PMI at also at 945. We have Richmond Manufacturing Index at 10 o'clock. And that is it for Tuesday. Moving on to Wednesday, we have new home sales at 10 a.m. We have crude oil inventories at 10:30, and then we have a Powell speech at 4:35. Let's see, what is he speaking on here? It's a lecture in social science and public policy in Washington, D.C. So it probably won't be that major impact, but it is after the bell, so keep an eye on that. So Thursday, we have advanced GDP quarter to quarter, unemployment, more GDP data, core durable goods and durable goods, and also wholesale inventories. All of that data is coming out at 8:30 in the morning. So that is going to be pre-market. If you guys trade pre-market, be sure to watch out for that. Moving on to 9 o'clock, we have a Fed talk. 10 o'clock, we have pending home sales and natural gas at 10:30. Moving on to Friday, we have core PCE index at 8:30, personal income and personal spending also at 8:30. Fed talk at 9 a.m. Consumer sentiment and inflation expectations at 10 o'clock. Okay, so that was a lot to go over. The biggest things you want to watch out for, the number one thing is the PCE data on Friday. The second thing would be the GDP data on Thursday. Also, obviously, Powell's speech, but that's after hours, which makes it not that big of a deal. But definitely PCE and the GDP data. Everything else, probably about medium impact. All right, moving on to the analysis here. We're going to start off as we always do. Let's grab the weekly profile. 1, 2, 3, 4, 5. Going back to Sunday here. And let's go ahead and mark out some levels that are not overlapping. So let's get rid of the overlapping levels here. We only care about the weekly ones for right now. All right, so the weekly value high is going to be 44.12. Weekly POC is 44.02. Let's make sure to dash these so we know they're the weekly levels. And the value low is going to be 43.26. Okay, so let's take a look at the shape of last week's profile. It was leaning slightly D-shaped, slightly P-shaped until Friday when we had that nasty sell-off at the end of Thursday, and then you continued it on Friday. So that created that really long lower tail. So now it looks like a P shape, but it's actually a trapped P shape where we have a lot of this value that was trading towards the highs here is now being squeezed out on these lower pushes. You can see these big volume nodes towards the lows here. So it ended up closing on the low, like almost the absolute low of the week. So very weak close on Thursday and Friday. All right, let's go ahead and pull up, not that one. We need this one and this one. There we go. Get our intraday profiles here. And let's go ahead and mark out any levels that are not overlapping. So it looks like Friday's value is good. Let's see here. Thursday's value, the low is overlapping. We have the high marked out there. The low has been taken on Wednesday, and then we have the high marked there. And that should be good. We can mark out the high of Tuesday that hasn't been tested. And that should be all we need. And then to the downside, we already have a few levels marked out. We actually might need to grab a few more because I only have it marked out to 4,200. Let's go ahead and go to the daily here. And let's find some more levels to the downside here. The first things first, we're going to mark out that low right there. That's going to be the low of June 1st. And then let's see, where is all of this value here? So let's mark out the low of this range here. That's going to be around 4,100. And then let's go ahead and grab some value here. So let's take a look at where the value is trading on these few days right here, because we have levels right here. We have levels to the downside. We don't have any levels in between there. So let's take a look at where that value is trading. All right, what day is that? That is Friday, May 26th. Let's go ahead to the 30-minute here. Let's go to our tool here, and let's go back to May 26th. There we go. And there's our profile that we drew out earlier. Just a little trick for you guys. If you want to find value, you can use that go-to tool. It definitely helps. All right, value low right there. Let's mark out that POC. And let's mark out that value high. And because this is actually a range, we're actually grabbing a few days here. Just so we understand that, let's go ahead and dot these lines so we know they're not from just a single day. And then another level we want to mark out, let's mark out this LVN right here. All right, that should be more than enough levels. Let's go ahead and reset. And let's see what it looks like to the downside now. Yeah, so now we have plenty of levels below us. Okay. So now that we have all of our levels, let's kind of put them all together here and see what we're looking at. So it looks like if we start showing weakness below, I would say 4240 to 4230, the obvious support is 4200. That is a major daily support. It is the accumulation high from that entire range that we were in for almost a year. So think of this more as a zone. So kind of anywhere from here all the way down to like 4150 is a major support zone for the mid to long-term traders. So anywhere inside pretty much any of these levels right here, we could be seeing a major bounce on the daily. So keep that in the back of your mind when you are scalping these levels. So on the scalping and day trading sense, if we stay below this 30 level, we're looking for 4,200, and then probably could see a bounce to regain some value here, maybe back into 80, maybe back into 26, whatever it may be. If we don't see a bounce, we are looking for lower support, anywhere around 4160, possibly to the 30s. For the buy side, the bullish trade plan here, if we can stay above 4282, there's a bit of a value gap right here. We have the value high of Friday and the value low of Thursday, but there's no significant value in between. So we have a couple of nodes here, but we do not have a value area. So if we want to generate that value, we would need to hold above 82 and probably put in somewhat of a D-shaped day in between that area. So 4326 to 4282. If it stays above 26, we're getting bullish into that value retrace into 56, and then just take it day by day. There's another value retrace into 87, so on and so forth, looking for those value retraces. But one more thing before we go off of ES here, let me show you the daily. And let's actually go to the weekly, since this is a high time frame. So what we were talking about earlier is this major accumulation right here. So this started around April 2022, and it didn't break until May of 2023. So a full year of accumulation. It was a very wide accumulation. It topped out around 4,300. It bottomed out around 3,500. So a massive range there. So what's basically happening is we had that major accumulation. We are finally breaking out of it with that rollover period. If you guys remember, we had that rollover gap into May and June of 2023, and now we are pulling back to fill in that gap, and we're retesting that accumulation. This is the first major retest of this accumulation since it broke out. So with that said, the high time frame traders should be protecting it. If they are not, this gets very ugly on the high time frame chart. Basically, if they do not protect these highs right here, it is most likely looking for value towards those lows. So you see where all these lows are on this accumulation? We are looking to grab liquidity on those lows if it cannot protect the high. So we're mainly scalping, so we don't care too much about this, but you always want to understand what's happening behind the scenes. So if we lose 4,200, long story short, we could be going quite low here, 3,800, possibly 3,500 on the weekly to monthly time scale. So just keep that in the back of your head for these next few weeks when we are approaching those levels. Okay, moving on to NASDAQ here. Let's do the same thing that we just did. So let's go ahead, 1, 2, 3, 4, 5. Grab that weekly profile. Let's get rid of our old levels here. And we'll get rid of this level. Actually, we'll leave that there for now. Okay, so we have the value high trading at 15.3. EOC trading at 15.1. And the value low trading at 14.97. And same profile shape. It was a D shape that ended up breaking downward, and now it is a trapped P shape. All that value on the high is being squeezed out on the low. Okay, time to look for the other value levels here. We have the high of Friday. Let's mark out the low of Friday. We want those most recent value levels. And then we want levels that are not overlapping. So that one's overlapping. This one is okay. Let's see here. Is that one overlapping? No, that one's pretty good. Let's grab that. And I think that is okay. So that one's old. Let's go ahead and get rid of that one. And we'll move it to here. That is the value area high of Tuesday. And then same thing we did on ES. Let's grab that weekly high. I know it's a lot of levels, but once you do this a few weeks, you kind of understand what's going on. Okay, so one thing to look at on the daily, the levels to the downside on NASDAQ. If you guys remember that rollover gap that we were just talking about on ES, that rollover gap has been filled in on ES. It has not been filled in on NASDAQ. So we gapped up on that contract rollover. You came down to retest it right here, right here, right here, and once again. So we've tested it like 4 times, but it has not filled it in. It would have to go down to around 14,500 to fully fill in that gap. So most likely that is what NASDAQ is going to do this week. And below that gap, we already have a few levels marked out. 14,485, 14,36, and 14,25. If we don't see any buy pressure once that gap is filled in, look for these lower supports. If it does fill in that gap and you start to get a lot of buy pressure, same thing we talked about on ES, you just take it day by day, and we're looking for those value retraces. So basically above 14.8, we're looking for the start of the value retrace here, which would be around 15,000 all the way up to 15.1. And then the next value retrace would go to 15.17 and finally 15,290. The beautiful thing when we have these downtrends like this on volume profile, it gives you those easy targets on the way back up. You just take it day by day, value retrace by value retrace. All right, going on to crypto here. We're actually finally getting some movement on the crypto market. It's been dead for so long. We are finally getting some movement here. So it all started with this major pump right here from that ETF headline that ended up being fake. And then it pulled all the way back. And then now we are actually recovering that ETF high, the news high. fake news, I guess you would say. So now that we are recovering that high, you can see there's a lot of sell pressure coming in here. 3 past days, seeing those top wicks. They're all hitting that 50% of this old distribution up here. So if we can't hold above that 30,300, very likely going to start coming back down to retest these old value points. So this level right here, it was a fair value gap, LVN, whatever you want to call it, that has been filled in. This level has been filled in as well. So what we want to watch out for is this liquidity resting below there. And let's go, what day is that? That is Friday. Let's go to a 30-minute here. Where is Friday? Okay, here's Friday. We want to look for, we don't need this one. There we go. We want to look for where that value is very weak. So basically, you can see this value gap right here to here. There's not a lot of value in between these 2 days. So kind of like a fair value gap, not exactly, but very similar. So let's go ahead and mark that out. Let's go back to the daily here. And you can kind of see it almost lines up with what you would grab if you were doing fair value gaps, but it's not exactly the same. So basically what we're looking for here is if it loses 29.5, look for that value to be filled in down to 28.8. And then if it gets very weak, we're looking for liquidity below this level here, 28,000. And then bullishly, you're just looking for a retest of the distribution high, which is all the way back to 31,000, if we can hold above this range low. Okay, Ethereum is a completely different story here. Ethereum, like we were talking about in our last video, it was a lot weaker than Bitcoin. It wasn't ready for that breakout like Bitcoin was. It was sitting on the accumulation low, whereas Bitcoin, it already broke out of that accumulation. So it's trying to catch up very slowly, very weak, but it is slowly trying to catch up to Bitcoin. You're bouncing off this range low. You're hitting the middle of the range. It might be able to complete that rotation back to 1700. If it breaks 1700, maybe if Bitcoin continues to rip, then you want to look for this value around 1760 to 1800. If Bitcoin gets weak, it looks like Ethereum already is weak. It still hasn't gotten out of that range. Probably going to come right back down to that range low, which would be around 1540. You're kind of smack dab in the middle of this accumulation, so it's not really giving you a great place to trade on Ethereum. Okay, moving on to oil here. Oil has been getting a lot of action, obviously, because of the Middle East headlines. Basically, it's failing. I wouldn't say completely failing. It kind of grabbed that value at 89, and now we're starting to lose that area. So if it stays below this 89, it's probably going to come back down and see if it can look for more value around 86 to 85 before breaking out. But it all depends on how those headlines are coming out in the Middle East. I still believe that oil could easily get to 95, possibly 100, if that conflict continues to escalate. So if we stay above this 89, the next major value level would be 91.75, and then around 93. And then above that, you're just looking for new highs. We've been getting some really good scalp trades on oil recently. So make sure if you guys are scalping, keep an eye on that 15-minute liquidity pattern that we like to trade. It has been providing some excellent trades the last few weeks. Okay, let's move on to the dollar here. The dollar is still breaking this uptrend here, and you are putting in a lower high. So we broke the uptrend, we put in a low, we put in a lower high. Now we want to see if it wants to continue this downtrend here. Are we going to put in a lower low? So if it breaks this low here around 105.4, we're going to start this downtrend. We don't know how aggressive it's going to be. It could be very aggressive, but we'll keep an eye on it. Right now, you're not exactly downtrending. You're just ending the uptrend, right? You're kind of putting in that distribution, possibly a bull flag. We don't know just yet. But if it puts in that lower low, it's going to start looking pretty weak. And we might be going down around 103.50. So keep an eye on that. There's a lot of data coming out this week, data that is extremely high impact, PCE and GDP. So if those can break this structure here, put in a higher high, we're just going to go right back into an uptrend. And the next major resistance, I think, is around 108. I'd keep an eye on 108. All right, let's go ahead and go to our daily here on the euro. So euro, pretty much the same story. Like if I go ahead and inverse this, you can see it is literally identical to the dollar. You just got to invert it. So basically what we just said on the dollar, just flip that. We're putting in a higher low here. Not exactly in an uptrend. You're just ending that downtrend. If we can put in that higher high, look for around 107.7. And then possibly looking for that higher value around 110 to 110.06. If we fail to put in a higher high here with that data coming out this week, probably going to go straight back into a lower low, breaking the low from early October, possibly into 104.8. Okay, so keep an eye on that. But all right, guys, that was the summary of markets. Hopefully you guys enjoyed this video. Be sure to hit that like button if you did. Be sure to subscribe if you guys are new here. And I will be seeing you guys this week, Monday through Friday, 9:30 in the morning. I'll see you guys on our next one. Peace out.